Silver just jumped 6% today, gold jumped 3%, silver doubled gold's move, and the mainstream media completely missed why. What happened today was not a rally, it was a signal, a structural signal that this market has not produced in months. And once you understand what fired today, $73 silver will never make sense to you again. Because today was not about Iran, not about the Fed, not about the dollar. Those were the triggers. The real story is what was already built underneath this market, and it took years to build. Two walls just closed in on silver simultaneously today, one from the demand side, one from the supply side. When both walls close in at the same time, the price has only one direction available. Up, I am going to show you exactly what those two walls are, the data behind each one, and why this market cannot suppress silver price the way it has for the last 3 months. The suppression mechanism is broken. But before I do, I need to show you one number, one specific number from last month that tells you everything about where silver is headed, and when you see it, the question is not if, the question is when. The COMEX vaults, the physical silver warehouses backing the entire paper silver market, are nearly empty. Not slightly low, not concerning, nearly empty. Down 80% since 2021, in 5 years, when the vault backing a paper market is 80% empty. The entity controlling that market loses its ability to suppress price because suppression requires metal, and the metal is almost gone. That is supply wall 1, and it has been building for 5 years, quietly, while retail investors watched the paper price and wondered why silver was not moving. The vault was draining every week. Now demand wall 2. Last month, China recorded its single largest silver import in recent memory, 836 tons, in 1 month, 173% above normal, 173% above the 10-year seasonal average, in 1 month, while simultaneously classifying silver as a strategic national security material. China is not investing, China is securing. Two walls, supply nearly gone, demand surging at record pace, and today, the catalyst that fired both simultaneously. That is why silver doubled gold, and that is why this is just the beginning. But here's what the mainstream analysts completely missed about today's move. The COMEX drain and China's import surge did not just happen this week. They have been building for months, unnoticed, and the banks already knew. Bank of America published a target of $309 for silver in 2026. Citibank 150 to 170, JPMorgan 81 average. 3 of the largest financial institutions on earth published silver targets that are 2 to 4 times current price before today happened. While retail investors were confused by $73 silver, they saw the double pressure building, they saw COMEX draining, they saw China securing supply, they published their targets, and today, the market finally started pricing in what the banks already knew for months. I want to stop here and ask you directly, did you know Bank of America published a $309 silver target for 2026? Type yes or no in the comments right now. Because if the answer is no, then you understand exactly why today shocked the entire market. Most people had no idea this structural setup was building. The data was there. The banks published it. Retail missed it. Now here is the most important question from today. Not why silver jumped. That is explainable in one sentence. The most important question is whether this jump changes anything structurally. It does not. The structural setup that produced today's move is still completely intact. COMEX is still draining. China is still securing. The deficit is still widening. The bank's targets are still published. Nothing changed. What changed today is the market's awareness of that structure. Iran gave investors permission to look at the structural data they had been ignoring for 3 months, and what they saw produced 6%. But here is what the awareness has not yet reached, the full magnitude of the double pressure. Because if today's 6% was just the market seeing part of the picture, what happens when it sees all of it? That question, what happens when the market sees the complete double pressure, is what I'm going to answer tonight, with data, with historical precedent, and with 3 specific things to watch going forward. Let me start with exactly why today happened, because understanding the mechanism is what tells you whether this repeats. And the mechanism that fired today has only appeared twice before in silver. Both times it appeared. Silver did not stop at 6%. Both times it led to a move that redefined what silver investors thought was possible. I will show you both parallels in 4 minutes. But first, the double pressure in full detail, because this is the structural story that explains not just today, but every silver move that is coming between now and the end of 2026. Supply pressure, the COMEX vault drain. This is the most verifiable signal in the entire silver market. CME Group publishes it daily. Every single person watching can check it independently tonight. In 2021, COMEX registered silver. The physical metal immediately available for delivery stood at over 500 million ounces. Today it stands at approximately 76 to 77 million ounces. 500 million to 77 million. in 5 years. That is an 85% reduction in the physical silver backing the entire paper market. And the drain has not stopped, it continues weekly. Now here is what that drain means for suppression. The paper silver market has historically been used to keep price below what physical reality demands. That mechanism requires physical metal to function. When the vault holding that physical metal drops from 500 million to 77 million, the suppression mechanism loses 85% of its operational capacity. It is functionally broken. Think of it this way. Imagine a dam controlling a river. The dam has been losing its concrete for 5 years. Today, 85% of the concrete is gone. The dam is still standing, barely. And here is the timing detail that makes today significant. Coverage ratio, the percentage of paper claims backed by real metal, currently stands at just 16.6%, tight. Paper leverage running at 6 times. 6 paper claims for every 1 ounce of deliverable silver. When delivery demand rises, as it did in January, that ratio cannot hold. The vault cannot deliver 6 ounces it does not have. January 2026 proved this in real time. In 7 days, 33 million ounces physically withdrawn for delivery. 26% of registered inventory gone in 1 week. The dam cracked. Silver went from $80 to $121. $41 in 4 trading sessions. Not because of Iran, not because of the Fed, because the paper market could not deliver what was demanded. That was January, with COMEX at roughly 100 million ounces. Today, COMEX sits at 77 million, lower than before January's squeeze. The dam has less concrete now than it did then. The supply wall is not approaching. It is here, 77 million ounces, 2 million above the alarm threshold I have been tracking. The drain continues every single week. This is supply pressure 1, now demand pressure 2. And this is where the story goes from concerning to extraordinary. Because what China did last month with silver has no recent precedent in precious metals import history. 836 tons of silver imported by China in March 2026 alone. To understand the scale, the global monthly average over the last decade is approximately 300 tons. 836 versus 300. 173% above the 10-year seasonal average in 1 month, while simultaneously banning silver exports domestically. China banned silver exports and imported at record pace simultaneously. That is not a trading decision. That is a strategic resource acquisition, the same move they made with rare earths in 2010. In 2010, China cornered rare earth supply. The price of rare earths increased by 800% over the following 2 years. The world had no alternative. Sound familiar tonight? China needs silver for their own domestic AI build-out. $700 billion in AI infrastructure, all requiring silver for chips. They are not buying silver for profit. They are securing operational supply. And here is what that means for the global silver market. When the world's largest buyer classifies silver as strategic, removes it from export, and imports at record pace, the supply equation breaks. Now combine supply wall 1, COMEX 85% drained, with demand wall 2, China record imports plus ring-fenced supply, both walls closing in on the same silver market. At the same time, today, this is the double pressure that produced today's 6% move. And here is why it does not stop at 6%, because the banks did the math on this exact double pressure months ago. Bank of America. Their head of metals research, Michael Widmer, published one specific number for silver in 2026, $309, not a range, a specific number on record. Citibank published a range of $150 to $170 for silver in 2026. JPMorgan published an average price forecast of $81 per ounce. 3 major institutions, all published above current price, all published before today's 6% move. All have now been partially validated by today's market reaction to the structural pressure they identified. Now let me explain exactly what today's catalyst did. Because Iran is not the reason silver jumped. Iran was the key that unlocked a door that was already built. The double pressure built the door. Iran opened it. Axios reported the United States and Iran are close to a 1-page peace memorandum. That single report crashed oil by 9%. 9% in one session. The largest single-day oil drop in recent memory. Oil dropping 9% means one thing for the Federal Reserve. The primary driver of inflation that has kept rates elevated just got significantly smaller. The Fed's problem got 9% easier today. When the Fed's inflation problem gets smaller, the probability of rate cuts increases. When rate cut probability increases, the dollar weakens. When the dollar weakens, silver priced in dollars goes up. But here is what made today different from a standard dollar weakness rally. The structural double pressure was already built underneath. COMEX drain, China imports, 6-year deficit, all already in place. So when the monetary catalyst fired today, it fired into a market that was already structurally constrained on supply and already surging on demand. The 6% was the structural pressure plus the monetary trigger, and that is precisely why silver doubled gold today. Gold only has the monetary trigger. Silver has the monetary trigger plus the structural supply pressure plus the structural demand surge, all three simultaneously. The deal is not signed. Iran has said only a fair and comprehensive agreement is acceptable. 2 prior peace signals reversed. The catalyst could reverse, but the double pressure underneath cannot reverse. COMEX does not refill itself. China does not return its strategic reserves. 6 years of deficit does not reverse in a new cycle. The structural pressure is permanent. The catalyst was temporary. The structure remains. 2011, quantitative easing began. Dollar weakened. Silver had structural supply pressure. The monetary engine fired into a structurally constrained market. Silver moved from $18 to $48, from 18 to 48, 267% in 8 months. With fewer structural pressures than exist tonight, no 6-year deficit, no China ring fencing, no COMEX at 77 million, January 2026, delivery squeeze, structural drain combined with delivery demand. The monetary catalyst combined with supply pressure, silver from 80 to 121. 4 days, not 4 months, 4 days. When the structural pressure meets the monetary catalyst in a constrained market, the move is non-linear, not gradual, non-linear. Both precedents confirm this. Tonight, COMEX is lower than before January. Physical demand is higher than before January. China imports are at record levels. Banks have published targets 2 to 4 times current price. So, is today just the beginning? Let me answer that directly, with data, not opinion. COMEX coverage ratio at 16.6%, paper leverage at 6 times, drain continuing weekly, 2 million ounces from alarm threshold, supply pressure not easing, still building, signal 1, yes, physical investment demand running 20% above 2025, Silver Institute confirmed 3-year high, coin and bar demand up 18%, Sprott doubled physical program, signal 2, yes, China imports at record pace, ring fencing supply, 700 billion domestic AI build-out requiring silver, strategic classification in place, supply wall getting higher, not lower. Signal 3, yes. Bank of America, 309. Citibank, 150 to 170. JPMorgan, 81 average. All published, all above current price, all still on record. Signal 4, yes. 4 signals, all pointing the same direction, all unambiguously saying the structural setup is intact. Intact and building, not peaking, not reversing, building. The data says yes, this is just the beginning. Now, 3 specific things to watch between today and the end of May. Watch 1. COMEX registered silver inventory every Tuesday at cmagroup.com. The alarm threshold is 75 million ounces, currently at 77, 2 million away. Watch 2. May 5th, 4 days away. Silver mining companies begin releasing Q1 earnings. Watch for realized silver prices above COMEX spot in those reports. That confirms sovereign wealth fund premium purchases. Watch 3. Kevin Warsh. His first Federal Reserve meeting is May 28th. Listen for one word, accommodation. That single word from a new Fed chair signals rate cut path. Silver responds within hours. 3 watches. Tuesday, COMEX inventory. May 5th earnings. May 28th, Warsh statement. Any 2 of 3 firing in the same window creates the institutional repositioning cascade. 48 hours. Before I let you go tonight, silver shocked the entire market today with a 6% move. That move was produced by a monetary catalyst firing into a structural double pressure that has been building for 5 years. The double pressure cannot reverse. COMEX at 85% drained, China at record imports and ring fencing supply, 6 consecutive deficit years, 3 major banks publishing targets above current price. Every single structural signal says this is the beginning, not the middle, not the end. The beginning of the price discovery process that the double pressure has been building toward for 5 years. Today was day 1. 2 questions for this community. Question 1. Is today just the beginning? Type yes or no. Tell me your specific reason in 1 sentence. I respond to every substantive read. Question 2. Your December 31st, 2026 silver price. 1 specific number, not a range. I am compiling every community answer versus Bank of America 309. Who is right? If tonight's analysis gave you a framework for reading silver's structural double pressure, hit the like button right now. Subscribe with notifications on. May 5th update within hours of earnings dropping. Share this video with one person holding physical silver who was confused by $73 paper price. Today's move begins the explanation. Share it before May 5th. One person. That is all I am asking. Until next time, stay physical, stay informed, stay positioned. Silver shocked the entire market today. The double pressure underneath ensured it. That same pressure is still building. Yes, this is just the beginning.